Hi, and welcome to the fourth episode of the Housing Huddle. So this episode we are in Chris's office.
Welcome.
We're going to talk about what credit score you need to qualify for a mortgage and
some other tips and tricks on how to improve your credit.
How to improve your score. So let's dive right in.
Sure.
What minimum credit score do you need to qualify for a mortgage?
Great question. So we usually tell people, if you're wondering what score to shoot for, I say first one to shoot for would be 640. Okay, especially if you're a first-time buyer. Okay. 640 will get you into the first-time buyer programs, so you'd be able to do that. And being much higher than 640, doesn't necessarily give you a lot of benefit when you're a first-time buyer.
What about conventional loans? What do you need to qualify?
Sure. So conventional loans are definitely the higher the better. I mean, over 680 is really ideal. I mean, best pricing is going to be in the sevens, but 680 and up is really where you want to be for most conventional. Although it does technically go down to 620 on conventional.
Okay.
Yep.
Okay.
And then the other programs, like if you're a veteran, a VA mortgage, we don't even have a minimum credit score requirement. The VA doesn't require it, so neither do we.
That's awesome. It's really nice.
Yep. FHA is another government program, and that you can really technically go down to a 580.
How is your score calculated to qualify for the mortgage?
Sure. So when we look at your credit score, so we pull all three credit bureaus, and all three bureaus have a specific mortgage calculation. Okay, and it's typically a little bit different than what you'd find on like a Credit Karma or like your bank's FICO app, or something like that. There's a specific one for consumer credit. There's other models for actually car loans, and there's other models for home loans. One from each of the bureaus, so we get all three, and we take the one that's in the middle, and that's what we use, for qualifying.
Just improving one of those scores will help to bring your overall middle score up.
Sure, yeah, because typically, I mean, even if you improve one score, more than likely at least one of the other bureaus, if not all three, are probably going to pick up whatever positive change you did.
Quick wins on how to improve your credit score.
Fastest way to improve your credit is to improve your credit utilization. Okay, so that's kind of a fancy way of saying, pay down credit cards.
Okay.
In general, that's what it is. So if you have credit cards that are charged up, let's say if you have a $5,000 limit on a card and you owe $5,000 on it, pay that thing down. As you get if that's your only card that's charged up, because they look at the total of all your cards. So if you have 5 cards with $5,000 limits, and you have you have $25,000 in available credit, but you only have one card is maxed out, that's not going to hurt you as much as if all of them were maxed out. Okay. So whatever that number is, you start bringing down the amount that you owe versus your available credit. That is the fastest way to improve your credit score.
Anything else you can do besides paying your credit cards down?
Sure. Biggest components of calculating your credit score are what we just talked about, your credit utilization, and also your on-time payments. Okay.
Yeah.
So if you're more than 30 days late, your creditor will report that to the credit bureaus, and those unfortunately are harder to get away from. Late payments. Certainly not impossible, but they just tend to take a little bit more time. And you can, have a really good score, but then if you're late on something, it can ding your score. Although, here's the other thing, is these creditors make mistakes, believe it or not. So
you paid that on time.
Right. People will look at it all the time. We find errors and they say, well, I've never been late with those people, so call them up. That's the first thing you do. Hey, I was never late. So a lot of times they'll, either fix it or you'll dispute it. You can dispute it with the credit bureau, and then the dispute will actually improve your score too.
Okay.
Yeah, just from disputing, a derogatory mark.
Good to know. So if something doesn't look right, definitely don't just let it sit there. And try to work it out.
For sure.
To improve your score?
So there are a couple of other tricks. So one is, we've seen this Experian Boost,
Yes.
that is fairly new. Within the last couple of years, I think it came out, and so that works especially well if you don't have a lot of credit, or if maybe you had some bad credit in the past, or been through a credit event and you're coming out of it on the other side and you're looking to rebuild positive credit. What that will do is you link in, you can go to it, I want to say it's Experian Boost, you can Google it, experianboost.com, something like that. And you can log in and connect your bank accounts to it. And that will go through and it will look for your cell phone bill, utility bills, power, that kind of thing, and it will build a trade line for you around those accounts, and it will actually give you some credit improvement, as long as you've been on time. And by the way, I think if you haven't been on time, or if it didn't no, I think it tells you there it will not hurt your score in any way.
Okay.
It won't hurt you, so it's worth a shot.
So what if you don't have any credit? Is this something to do that can help you to build credit?
I would definitely do that.
Okay.
I would do the Experian Boost. If you don't have credit or you don't have much credit, I would do that. To try, that'll help you get a little more potentially, as long as something is in your name. If you're paying a cell phone bill, you're paying a power bill, something like that. And then the other thing that you can do is you could get in as an authorized user on an account with someone else who is using credit responsibly. That would be the key. Someone who's going to pay the bill on time. Or maybe if you have a card with them as well and you pay it together. But usually it's someone else is paying the bill from what we typically see, and that you can potentially piggyback off of that. So we've seen that, and that's a pretty quick way to help build credit as well.
Okay.
Yeah. So you could also, if you're coming out of a credit event, if you have no credit, no one will give you a credit card. You could do a secured credit card, which is, I know Capital One has one where you can send in. They call it secured because of whatever your limit is, you have to send them a check for that amount.
So it's almost like a debit card, but reports as a credit card, right?
I would say that's a good way to look at it. I mean, because they essentially loan you money against the deposit that you put in, and they report to all the credit bureaus. So it's a great tool, and I want to say, and they'll send you that money back at some point. Usually, you pay on time for a year, and they'll send you your deposit back and convert it to a regular credit card.
Okay.
Yeah. So so that's a good way to kind of help. You can put some gas on that, some groceries, pay it off. Yeah.
What do you think is a misconception about collections? So say I have collections on my credit report. What advice would you give me?
Don't pay them.
Okay.
I'm serious. And I'm not saying to not pay the money that you owe. What I'm saying is that collection accounts, when you're, let's say if you're going to buy a house or another major purchase, and you have, let's say you have $5,000 and you said, I need to clean up my credit, you're going to get the worst return for your investment paying collections off.
Okay, so put that money towards something else.
Put it towards something else.
Okay.
Yep.
And that kind of leads us to also, if you have saved a good chunk of money for a down payment for your house and you're thinking you're going to put 20% down, 30%, sometimes it might not be in your best interest to put all that money as your down payment. Instead, if you have built up credit card debt, to pay down some of that debt first and get yourself in a better buying position. But that's all based upon your own situation. But just kind of be open to that if someone were to tell you that this might be a better route for you to take.
Right. Yeah, use the money. I mean, because paying down some debt, one, is going to improve your credit score.
Yes.
And two, you're not going to be paying high, because it's usually going to be high interest on credit card debt. So yeah, it's probably going to make more sense to pay that down rather than to put it down as a down payment.
Great. And some of these changes can improve your score within 30 days. So start looking at it sooner than later.
Great. Well, thanks for the excellent questions.
Yeah, and if you have any other questions, just feel free to shoot them to us, and we'd be happy to answer them. And we will talk soon.
All right. Bye.
Bye.